Pricing is way up in the Inland Empire. This is the most expensive February, I think, ever. But at the same time, inventory is way up and sales are a little lackluster compared to last year. What's going on? Well, the only easy explanation is that the Inland Empire has simply run out of affordable housing, and the only inventory coming to market is at the very high end. What does that mean for Inland Empire homebuyers? That's what we're answering in today's Inland Empire Real Estate Update for February 26th, 2025. I'm Jon Schwartz, California's 1% homebuyer agent. I post these Inland Empire real estate updates every other Wednesday, so subscribe and check back to stay on top of your market. And if you're planning on buying a home in San Bernardino or Riverside County, you really should do so with a lower agent fee and without an exclusive representation agreement. Learn more and schedule time to chat at jonsch.com. That's jonsch.com. Now let's get into the data. And we're looking at the latest weekly print from Redfin for the Riverside, California Metropolitan Statistical Area, which incidentally is all of Riverside and San Bernardino counties, which incidentally is what we call the Inland Empire. And we're looking at median sale price for a home in the Inland Empire, down slightly over the past 2 weeks. We're now riding at $588,000 for a median priced home in the Inland Empire. 2 weeks ago, we were at $590,000. Now, what's interesting that you can see pretty immediately is just how much higher prices are than the same time last year. This is easily the most expensive February we've had on record here in the Inland Empire. In fact, prices are only slightly below the all-time peak hit last November, that being $593,000 for a median home. It is as though the winter just didn't hit the Inland Empire this year. We typically have lower prices in January and February than we had at the end of the previous year. But this year, prices are right where they were at the end of last year. Now we're looking at the new listing median price for the Inland Empire. This is the median price at which new listings are coming to market. And fortunately, we have fallen a bit in the past 2 weeks. Right now, the new listing median price is $603,000, almost $604,000. It's nice to see this number falling off because new listing median price is an excellent proxy for agent sentiment. If agents think the market is heating up, they'll keep pumping up those list prices. And if agents think that maybe the market's catching up with them and buyers aren't putting up with these prices anymore, they'll start lowering their list prices. So it's nice to see that agents are at least relaxing their expectations. And I sure do hope that we get some price relief here in the Inland Empire before the spring and summer home buying season really starts in earnest. Now we're looking at the number of new listings. This is the number of new listings coming to market each week in the Inland Empire. And as you can see, we've pretty much held steady the past 2 weeks, right around 1,160 new listings coming to market. That's about 12% over the number of new listings coming to market at the same time last year. It's very important to have this buffer. We need this buffer over last year's numbers in order to see prices decline. However, prices are super high. One wonders, how are prices remaining high if we're seeing more new listings coming to market each week than we saw last year? Keep that question in mind as we continue our journey through the metrics. Now looking at homes sold, this is the number of homes sold each week in the Inland Empire. And as you can see, this year, last year, and even the year before are basically in a scrum. And if we can find our green data point for this week, we sold 669 homes in the Inland Empire. That's actually 4% less than the same week last year. So, riddle me this, Batman. If more homes are coming to market than last year and fewer homes are leaving the market by being sold than last year, why is pricing so high? Well, that suggests that what is pushing pricing isn't demand. It's not people competing over houses and bidding up the prices. It suggests that the reason that pricing is so high is because the inventory coming to market is upper tier inventory. It's just more expensive homes. So what you see is a relative excess of inventory coming to market. It's not selling as well as it was last year, but still prices are so high because these are higher end homes. Is this a new and unsettling trend for the Inland Empire that cheaper and more affordable homes aren't coming to market this year? That we're seeing simply more expensive homes? So what we get is fewer sales and more inventory, but still elevated prices? And will some of these home sellers trying to sell their homes at higher prices have to slash them in order to get them off their books? 2025 is shaping up to be a pretty interesting year in the Inland Empire. Pending sales adds another interesting turn to the mystery. Right now, pending sales are at 1,057. That means 1,057 homes went pending in the Inland Empire this week. When a home goes pending, that means it enters contract. And a contract usually takes 30 days to execute. That's the escrow process. So a home goes pending about 30 days before it becomes a home sold. And right now we are ahead of last year's numbers by 1.7%. But if you notice, 2 weeks ago, we were trailing last year's numbers by 10.5%. So what this metric is telling us is that we should see homes sold grow to last year's numbers in the month ahead. Now, with homes sold rising, that means more inventory will be pulled off the market, and that should provide upward pressure on pricing. So maybe we won't get that price relief we want before the spring and summer season start in earnest. Now looking at active listings, and active listings fell off a cliff this week in the Inland Empire. A week ago, we were at 13,930 active listings, representing 27.5% growth over the previous year. Now we're down to 12,417 active listings on the market. That represents almost 13% growth over last year. Now, this is a unusual and previously unseen drop off in active listings. I suspect it may be a statistical error on Redfin's part. We're seeing lines like this in markets across Southern California. Interestingly, we're not seeing them in Northern California. Now, you have to keep in mind that Redfin is getting its data from local MLSs. There are maybe 24 MLSs across California, and so the data is very localized. So if there was an issue with Southern California MLSs, it makes sense that it wouldn't have spread to Northern California MLSs. So this could just be a statistical issue, a one-time statistical correction. If there is an organic reason for this huge drop in active listings, I think it would be related to the Palisades and Eaton fires in Los Angeles. We saw the same trend in Los Angeles, and the only conclusion I can come to is that if this many homes actually came off market in the past week, it would have to be because an abundance of inventory that was probably listed hastily in the wake of the fires was pulled off because, in fact, there was not a intense buying spree in the wake of the Los Angeles fires. So we're going to keep our eye on this in the weeks ahead to see if this number comes back up or if this is our new normal now. And with active inventory having such a sharp decline this past week, weeks of supply also had a pretty sharp decline this past week, dropping from 22 weeks of supply on the market to 19.3 weeks of supply on the market. Of course, you can see we're still a healthy margin over the weeks of supply on the market this time last year. Now, keep in mind, weeks of supply balances supply against demand. This is essentially a demand-adjusted measure of supply. Now, for prices to be so much higher than they were last February, we should expect weeks of supply to be much lower. That amount of competition would be necessary to elevate prices so high over where they were last year. The fact that weeks of supply is, in fact, higher than it was last year, meaning there's more supply on the market than this time last year, suggests what we discussed earlier, that it's not that demand is pushing prices up, it's that the inventory coming to market is just more expensive. Now, this is something we're going to keep our eye on as the year progresses to try to really get a sense of what's happening in the Inland Empire, what kinds of homes are coming to market, where the price points are, and what that means for Inland Empire home buyers. If you're planning to buy a home in the Inland Empire this year, I suggest you check out my expose right up there on the California homebuyer scam that is literally robbing California homebuyers of hundreds of millions of dollars each year. You want to be informed. Check it out, and I'll see you in 2 weeks.